Good morning.
Good morning, guys.
Good morning.
Happy Tuesday, guys. Excited to learn some stuff. My favorite topic, taxes. or
Taxes,
Taxes on
yeah.
stimulus,
Tuesday. This
all
is
of the above.
Tuesday.
All of the above, right?
Good
Good
morning. Good
morning
morning.
on Facebook. Good morning. And for everyone in the chat, you want to let us know where you guys are watching us from. We always like seeing if you're local. I think the farthest person we've had so far, we had, I think, one in Costa Rica and one in Colombia. We had
Mhm.
in Alabama. Trying to think. Oh, Jupiter, Michael's in Jupiter.
Oh, I see some of my clients on here.
Yeah.
Hey, guys.
Oh, Cayman Islands.
Good
Julie,
morning.
send me a ticket. Get me out there. Steve Questrust in Austin, Texas. Okay. We got some reach going on today.
Yeah.
Good morning. Good afternoon. So I know a lot of you guys have been following us for a while. You're going to start seeing some polls throughout the webinar. Today we actually kind of convinced Jose to do something a little bit different. I know a lot of times we do the PowerPoints and it's a lot of information. Today we're going to make it a little bit more conversational. Kind of just chatting what's new with the PPP program, the EIDL, Biden's tax plan, tax strategies, and I think we're going to focus mostly on. I know you get a ton of questions, Jose. I actually ask you a ton of questions,
Yeah.
and if I'm asking them, I bet a lot of you other guys are asking them
Oh, yeah.
also.
Yeah. We'll go over the most common asked questions regarding the loans, what's available. A lot of people are asking
Absolutely,
about the stimulus coming up.
yeah. The
Topic.
good thing is we also convinced you to give away a free giveaway today too, which I'm excited. It's
Yes,
always
we
like
did.
breaking your, yeah, Jose, I know you're an accountant,
Yeah.
you're a good negotiator, but we did decide that you would give away a free corporation setup, right? Which
Yes,
is
you
about
did.
a $625 value. So make sure you hang in there. We'll put the raffle, the text word, in the chat. Our assistant, or I should say our manager, Alexa, some of you guys don't know her yet. She is on video also. She's way prettier than the three of us, and she's excellent at her job. And she'll be working the chat with us, memberships, all the above. That will be pretty fun too. So.
Excellent.
And I just threw a quick poll up there. Ryan and I always trying to figure out where in the heck do you hear about us, right? Where do you find us? And like with any good marketing, we want to see where you heard from us. So if you don't mind, where'd you hear about today's event? If you go ahead and put it in there. These polls are anonymous, meaning, no one else sees them. Ryan and I do see what you put. So we're not going to hound you, all the above. So let us know where you're at. Give us I know it's Tuesday, people are still kind of logging in. So we'll give a few more minutes. How many people were watching football Sunday? So go ahead and put in the chat besides me. And I think Tom Brady is ageless. So for my football fans, I am just shocked. It's going to be a good Super Bowl. If you guys didn't notice, some of you guys are boot campers. We have our big boot camp coming up this weekend. I'm a big football fan, so I made sure there was no football going on this weekend versus having our boot camp on Super Bowl Sunday, which, I might not be here either if it was Super Bowl Sunday too. So.
Really? Where are you going?
So I see people from Ohio. I see a lot of people all over the place. Wow.
Who, who
Cayman
who's
Islands.
who's heard me speak before? Who's put it on the chat? Who's heard me speak before, and what have you learned in the past?
Yeah. And Alexa, and she also put the word taxes. Make sure you text that number 954-737-3239. Type in the word taxes, TAXES. So that way you could qualify for the free corporation. Just so you guys know, the text service, you can only enter once. So make sure you go ahead and do that. At the end of the event, we'll go ahead and announce our winner too. So I know some of the things also, Jose, what do we decide also? A 30-minute? Are we doing something like that also?
Yeah, we usually give a 30-minute consultation to go over anybody's tax situation for tax planning purposes. So, if you have the need to get some tax advice immediately, book that consultation. If you're a startup,
Mine now, Jose. I'm ready.
there you go, book it. Well, you got my personal cell phone, so you can call me anytime. You track me down, man.
I find you on Instagram.
Yeah.
I say we give it another minute or two. We don't want to penalize all the people that are on time. Common questions, just so you guys, if you've been watching our webinars, if you got questions, please put them in the Q&A. It's just easier to follow, is number one. We'll try to get to as many questions as possible. Throughout the chat, we're going to be putting on some of the different things that we're part of, including our WJL partnership program, where we actually partner with you and help sell properties. If you want to be on our cash buyers list, we'll put that stuff in the chat also. Our boot camp, if you're interested in our boot camp, our membership. So there's a lot of different things going on today. So, and we'll go ahead and put it in the chat again, the number to text. Alexa will go ahead and put it in there. It's 954-737-3239. And you're gonna text the word taxes, something easy.
Easy enough.
Easy. If I came up with the keyword, it would have been too long. I was gonna put I hate paying taxes, but that'd been way too long. Or I might use some verbiage that might not be appropriate. But
Hey, and
we don't condone that kind of language here.
I'm also happy to see we've got about 10, 15 of our mentor students on here today, engaging themselves, learning, continuing their education. So
excellent.
Glad to see that. And then as soon as you're done, go out and hit some doors and go get some deals. I said my feet. Gotta keep it moving.
Keep the momentum going.
Awesome. All right. I say we get started. So let's do this. Everyone ready today? Give me a thumbs up. Take your last sip of coffee, whatever you got to do. That Red Bull. Let's do it. I got my coffee. I'm ready. So
I'll do a quick formal introduction. Alexa Pera is our newest team member. She is now the manager for the Broward and Miami-Dade Real Estate Investors Association. So everybody, welcome Alexa.
Welcome, Alexa.
When you guys call the office, if you have any issues or anything, we're gonna give you to her. She's gonna take care of it all now.
Excellent.
Yeah, she's nicer than us, so you know that's we decided to finally have a nice person on our team. So
good.
It's a new year, 2021.
So Alexa, do you want to maybe, because we probably do have, I know we've got a lot of familiar names that I see, but I'm sure we have some new people as well. So if you kind of want to do an introduction of what the Broward and Miami-Dade Real Estate Investor Associations are, and WJL properties and all that good stuff.
Absolutely. Welcome, everyone. As you will find out soon, we are here representing Broward and Miami-Dade Real Estate Investors Association. We're here just to extend our huge network to you, and hopefully you see all the benefits that we are able to provide. We have our mentoring program that is phenomenal. Both Anish and Ryan are our lead mentors for our mentoring program, and we also offer different memberships that I will include information in the chat for you so that you can look into them, and please feel free to reach out to me with any questions. And yes, so don't be shy. I'm here.
And don't forget, guys, we have our upcoming boot camp. It's our first boot camp of 2021, January 30th, 31st. I know it's a little bit short notice. It's Saturday and Sunday, but come on. You didn't have plans. You weren't going anywhere, right? So if you're a student in the program, you already have a free seat because we include a free seat to our boot camp. If you're not in our mentor program, you can sign up. And if you end up coming into our mentor program, we will go ahead and credit you for what you paid for the boot camp so that you're not paying for both. It's not some bullshit upsell thing or anything like that. It's a 2-day intensive workshop. On Saturday and Sunday, we're going to be going through our marketing strategies, what type of leads we go after. We're going to be having Mr. Jose Ramirez as a guest. We'll be talking a little bit about filing corporations and different things. We have the title king himself, Kevin Thatcher. He's going to be on there talking about assignments of contracts and double closings. We're going to be going around and virtually visiting 4 properties. So live, we're going to have our contractor there. And as we virtually do these properties, you guys will be able to ask questions about the condition. We're going to analyze them, come up with our budgets for repairs, for rehabs, that sort of thing. And then on Sunday, we're going to be having Mr. Francisco Mago. He is the programmer and owner of BREIA. That's the #1 deal generator software program that we use. We've found probably 95% of our deals in the last 10 years and made millions of dollars of profit. So that's going to be on Sunday. And then Anish always has a cool breakout session that I'll have him tell you guys about.
Yep. So the cool thing is what we do is we break you up into teams. The idea is the homeowner is getting all these calls and text messages and I'm a cash buyer, and they finally said, I'm sick of it. I want to sell my property. So I'm going to call not only Ryan, I'm going to call 4 other teams, come with your best offer. So the idea is to take everything you learned from the weekend, the tools, REIA, if you're a realtor, all your knowledge from the weekend, and you're going to come up with an offer price to the seller. And if it's too low, you're not going to get the deal. If it's too high, you might not make any money. And usually these are properties that we're actually working on right now. So we'll tell you what really happens too. So the idea, and I always get this all the time, is, from a lot of people, oh, I've done a boot camp. Ryan and I, we might have to just change to the name or something because, oh, I already did one with, Van Merrill or whoever these other companies are. And what we found is, what we do is totally different because it's about action in your backyard. So.
Well, listen, and we make a guarantee on Sunday at the end of the day at 5 o'clock. I tell everybody, if you feel that you didn't get your money's worth in the last 2 days, and we used to charge over $1,000 for this, then no questions asked. We'll write you a check and refund your money on the spot, because we've never had a single person ever even come close to telling us that they didn't get. It's always the opposite. People are like, I can't believe how much I learned in these 2 days. People tell us you could charge me thousands for this because this information was more than I learned spending 6 months on YouTube University. So get signed up Saturday and Sunday. We hope to see you guys there. There you go. Let's turn it over to Jose Ramirez.
Yeah, so enough about us, right? A lot of you guys already know Brian and I, the star of today's show, Jose Ramirez. He's appeared, you're like one of the special guests that you've appeared at least, I don't know how many times with us, and been doing webinars or even live events, or in-person events. These are live, in-person events, teaching our members and our non-members and real estate investors for years. And, constantly the accounting, the PPP loans, things are constantly changing. And what we found is a big benefit, it's not only me asking or Ryan asking, hey, Jose, what's going on? We're starting to see our members, really asking these tough questions towards myself and Brian. And the first thing we tell everyone, we're not accountants. So today's webinar, it's going to be truly interactive. We're going to have some talking points that a lot of your clients I know have been asking, I've been asking. So we'll start with that, and then we'll kind of work through the Q&A to get to your questions. If they're really specific, right? We might not be able to get to that question. And, again, Jose is going to be doing a free 30-minute consultation. So if they're specific, what about my situation? Sometimes it might be a better one-on-one question with Jose. So welcome, Jose.
Thank you. Thank you guys for having me. So a little bit about me. For those of you who don't know me, my name is Jose Ramirez, and I'm the Chief Tax Strategist at Advanced Tax Advisors. We specialize in tax planning and strategizing for those in the real estate industry and e-commerce. We do things like cost segregation, accelerated depreciation, the real estate professional status, elevating passive to non-passive for tax purposes. So these are kind of like niche specific strategies that only people that work in real estate would know. So like I always say, if you are in real estate, work with somebody that understands real estate. If you are in the restaurant business, work with somebody that's in the restaurant business. And that's not me, by the way. I don't do any restaurants. All right. So today,
I just eat at those restaurants, right?
yeah, that's right. Yeah.
I'm a client.
As a deduction. Yeah. So you, today, normally we do a presentation, right? We do slides, we go over the strategies. Today is going to be a little bit different. Today is going to be more conversational because there's a lot in the climate out there in terms of stimulus, in terms of the new tax laws, the PPP, the EIDL advance, and then the proposed tax changes that Biden has, which we don't know which way it's going to go, but there's some stuff out there. So questions I get a lot. Well, stimulus, not so much. I've gotten a couple of questions about the stimulus. Most of our clients don't qualify, but the ones that do are asking, what's going on with that? Is it considered the third stimulus? I guess at this point, it would be a third stimulus. The second stimulus started going out in early January, the $600 per taxpayer, children and dependents. To qualify, your adjusted gross income's got to be between 75, under 75 for single, married, filing jointly, you would be at 150. Had a household, you're at 112.5. I have to look at my notes here because I can't remember all those numbers. The third stimulus is still in conversations. I mean, people thought that because Biden took office or, he's elected, he was going to move it pretty quickly. But being that the parties are sort of divided, he said, I'm going to step away and let them work it out. So right now they got the filibuster going on. They're not going to end the filibuster until they get 60 votes. Republicans are saying, no, let's look at where the money went originally. Let's do some sort of reconciliation and see where the money was spent. Democrats don't care about that. Democrats want to send the money out to the people and just get it out. So right now as of today, there's no decision, right? So there's talk about doing what's called the reconciliation, the budget reconciliation. If that happens, it means that they just have to have 51 votes instead of the 60 votes that was originally required. So it's a lot of political stuff going on. If that happens, 51 votes, then, the people are going to get upset on the other side of the aisle and political stuff that a lot of people don't care about. And that's just the way it works. So until they come up with an agreement between the two parties, no stimulus is going to go out. But when they do, and they think it's going to be towards the end of February now, that's when the checks will start coming out for the 1,400. The 600 already started going out. So just keep that in mind. If you haven't gotten it, if you qualify and you haven't gotten it, you may want to check on. You can check on it by going to the IRS website, do a quick search. Where's my payment? I think it is payment status. Okay. All right. Let's see. Any questions on that? Any questions on the stimulus? Do you see come up?
I mean, let's talk about number one is how many people actually in the chat, how many people actually got the first PPP? I'm just kind of curious if you guys qualify.
That would be the second part. Yeah.
Yeah. So I got one. So, I mean, the question is, and I'm going to give you the second question of that is, if you did not get any PPP money, why did you not apply? Was it, I don't know, difficult? Or did you just get denied? Or you're not sure if you would have got approved? And, sometimes in life, I kind of joke about that too, is that, there's free money out there and it's being in action. And if you don't know, that's okay too, right? Yep. It's not that you have to know all these things, but if the government's giving you the program's out there to help you. So we want to make sure that we get that money. So
let me add to that, Anish. Interestingly enough, with the first round of PPP, not all of it was used. There was 143 million left over of unused PPP money. So that goes to show a lot of people just didn't know they qualified. So there's a lot, and Congress and the SBA got a lot of heat for it because they say that they didn't do a good job at letting the low income communities know that they actually qualify. So this time around, they shifted it and they're prioritizing to to give the second round of PPP and the EIDLs to the low income communities. So that's interesting.
Yeah.
I guess
Yeah. So
they're
I think
fixing
you've
what they
got
thought
the-
they did wrong.
Right. I do see a couple people did get some PP money. I do see some people were, they don't think they qualified. So one of the things is, maybe, do you want to kind of maybe just kind of talk about that too? Since like some people think they didn't qualify
Right.
because they don't have employees or.
Yeah, and keep in mind that the PPP is a forgivable loan, right? The PPP, the only reason they're calling it a loan is because it's the only way that they can control what you do with the money. If they called it a grant and they give you a grant, it's just free money that you can do whatever you want with. But by calling it a loan, now they can say, I'm going to give you a loan. You're going to have to apply for the forgiveness, and you're going to have to prove to me that you used it for the intended purpose, which is payroll and mortgage or rent, utilities, things of that sort. But yeah, the loan is really a grant as long as you do what you're supposed to do. To qualify originally, it didn't really take much. You just have to prove that you did payroll and you took the average of 2.5 months of payroll, and that's the amount that you received as a loan, which will later become a grant once you apply. This time around is a little different. This time there are some requirements. Your income, your gross revenues have to have dropped by 25% on a quarter, comparing quarter to quarter. Right.
So let me ask you this, Jose, the specific question on that. When you say quarter to quarter, are they saying from like 2020 to now? Like, are you picking like my last quarter in December, or that quarter versus the third quarter, or are you saying from a year ago?
So you
Like,
would you would pick the last quarter in 2020, right? October, November,
Okay.
December. Run your numbers. If your gross revenues are less by 25% than your 2019 last quarter, then you qualify, right?
Got it.
If they're not, then you don't qualify. Let me go over my notes here real quick.
Yeah, because I
Okay,
get that.
so-
I was confused by that too.
Yeah, reduction in gross receipts between comparable quarters in 2019 and 2020.
Okay.
All right, and the loan is available between January 13th through March 31st. So it's active now. So if you think you qualify, apply, right? If your income has dropped, apply. If you're not sure if you qualify, apply anyway. I get a lot of questions like, Jose, I'm self-employed. I mean, I don't have a company, I don't have a corporation, I don't have an LLC. Do I still qualify? Yes. I mean, you could be an employee with a W-2 and have a side business, a side hustle, right? And your business dropped, you still qualify. Realtors, let's say a broker or a realtor that gets a 1099, you can use that 1099 as your self-employment income, and you qualify using that, right? If it dropped, you're going to get your 1099s at the end of this month. So use that to apply for this loan. Now, you're going to have to go directly to your bank, your business banker, to apply. There's nothing that you can do directly with the SBA, but there are many banks that are facilitating these, and they're moving pretty quickly.
Yeah, I know all the major banks are already doing it. I know they actually did something, and I'll just touch base on what you were talking about. Like Congress and government got a lot of slack saying they didn't really roll it out correctly. They did also offer, it's already past that point, minorities, women, they actually had a couple days in advance to work on their loans first. That started last week. Now it's open to the general public. Almost every major lender is already taking applications. My attitude, right, is if you're not sure, right, you should still apply, right? Just read the things, what you need. The worst that's ever going to happen is they're going to deny you.
Yeah.
Right.
When in doubt, apply.
Apply. Exactly. So, there's just a rule in life where you want to make sure that you're out there. And if you really have all your stuff, you're going to see it doesn't take too long. I mean, I literally got, my numbers from the bookkeeper. I cut and paste what was required for the PPP and I sent it to her, and then she sent it right back to me. So the other thing, guys, I know you guys are putting some questions in the chat. Do me a favor, please put them on the Q&A. The chat moves way too fast for us to keep track of it, and I'll probably miss your question. The other thing is, I know we probably added almost another 20 or 30 people showed up. We will also put in the chat, we convinced Jose to, as a giveaway, to set up one of your corporations. It's a $625 value. So make sure you text the word taxes. We'll go ahead and put it in the chat. That way you could qualify for the event. Also, Jose is agreed for the first 30 people after the event. He will do a 30-minute consultation. So hang in there, guys, and we'll start getting to some of these questions too.
Yeah, this will be, just by the way, this will be a tax planning consultation, not so much on the PPP or EIDL. I mean, I can answer some questions about that, but keep in mind that that's going to be directly with your bank. I can give you some guidance on where to go, but the consultation is going to be primarily for tax planning.
Absolutely.
I put a link in the chat directly from the SBA of lenders that are processing these applications. So take a look at that link. Hopefully it helps.
Yep, absolutely. So do you want to, let's kind of, it's kind of funny because I know we're talking about the PPP, but I got questions, I guess they're just general tax questions. So we're going to kind of wing it because, I don't want to say wing it, but I want to answer your questions, what's important to you guys. So Leopoldo asked, can profit from a flip being offset with passive investment losses if you're a real estate professional?
If you qualify for the real estate professional status and you materially participate on the passive activity, yes, but you have to track your hours, right? To qualify, you have to meet 2 tests. To qualify for the real estate professional status, you must have 750 hours in the real estate industry. And the majority of your time, 50% or more, has to be spent in real estate. That's one test. That's how you meet the real estate professional status. The second part of it is, if you have losses from rental activity, you have to materially participate in the rental activity. And there are 7 tests to pick from. You have to meet one of the 7 tests to qualify for the material participation. As long as you qualify for the material participation within the passive activity, you can elevate that passive activity and apply the losses to your active real estate business. And you can apply it to your W-2 income too. It doesn't just have to be any other business. But most W-2 employees don't qualify for the real estate professional status because of the timing, right? Most employees are working primarily at their jobs and not doing real estate. Unless you're doing short-term rentals, and that's a different story. That's a different strategy that we use there.
Absolutely. Bella's asking, are penalties taxed the same as interest by the IRS?
Are penalties taxed the same? What does that mean? What do you mean by that?
Yeah,
well, the IRS assesses penalties depending on what kind of penalty it is, right? If you're filing your tax return late, it's a different penalty than if you're paying your taxes late. Actually, if you owe taxes when you file your tax return and you file late, you're getting charged 5% of the tax owed every month. So my recommendation to people is always, even though you know you're going to owe taxes because you had a great year, you made $500,000, you're going to have a large $100,000, $150,000 tax bill. And some people may not have that in the bank, right? They've already spent it. Even if you don't have the money to pay them, you want to file. Because if you don't file, you're not only going to be accruing the interest on the tax that you owe, but you're going to be accruing penalties for not filing. And those penalties are a lot higher than just owing the tax on its own. They're 5% a month, up to 25% of the taxes owed. So if you owe 100,000, you're tacking on an additional 25,000 in penalties. So keep that in mind, guys. Don't file late. File an extension if you're not ready, but you still want to file the return, even though you may not afford to pay the IRS right now for whatever the case is. All right, keep that in mind.
Absolutely. So I kind of threw a poll up there. I don't know if you saw, how much money did you pay in federal taxes? So I'm seeing some numbers. I mean, I'm a little worried. Definitely the people that said I paid way too much. I know that's an open.
I want to see the numbers. How many numbers?
Too much. But there's some people that, you paid 11 to 20,000. 20 to 30,000. I'm assuming I paid way too much is more than 30,000, or maybe it's all relative, I guess. So, the thing is, like, what are you doing, right? It's the first job is to make money. You'll always hear me say this. First job is to make money. The second is to keep it legally, right? So think about how hard you work on your business, especially if you're self-employed and specifically real estate, to get those deals, right? Or wholesale or rehab. And now you're basically giving it away to the government, right? Just because of not having a tax strategy or tax planning. So whether it's, Jose or whoever it is that you're using, you want to make sure it's an accountant that works with real estate investors. One of the good things is, Jose is actually an investor himself. For the people that paid way too much, right? I'm just going to say a good portion, like over 25, no, actually almost 40% of you guys paid more than 11,000 bucks, right? So what would you tell them in general? Like what,
Yeah, I mean, all things considered, 11,000 bucks is not a lot in taxes, right? We're used to seeing people pay, they come to us paying 50,000, some pay 100,000. Those are the people that we can help reduce their tax bill significantly, because if you're paying that much, you're probably not using a lot of strategies. We usually can get them reduced to like 11,000, 15,000,
right.
But yeah, definitely, if you're a real estate investor, some of my landlord clients don't pay any tax at all because they're implementing the strategies that are for the real estate investor, right? The real estate professional status is a powerful, very powerful strategy.
Mhm.
You can apply the losses from your rentals to your ordinary income. So let's say you're doing two activities. You have rentals on one hand, and you have active flips or wholesaling on this hand. You're doing 400,000 here wholesaling, and you have losses of 400,000 here, right? Normally, ordinarily, you cannot net the two because they're two separate activities. One is passive, one is non-passive. But because you potentially qualify for the real estate professional status, you are allowed to net the two without any limitations. So 400,000 and 400,000, you net the two, you got zero. So how much tax are you paying? Right? I mean, that's powerful. I mean, listen to what I just said, right? You're paying no tax because you're using the strategies that are available to you that Congress put together for real estate investors to use. Completely legal, completely okay to do. It's just a matter of accessing the right strategies.
And
Okay?
you got a super fan. I just saw in the chat. So Daniel was saying, Jose helped me drop from over 30,000 to under 11,000 and zero this year.
Oh, excellent. Who was that? Did I miss that?
Daniel, I don't want to say his last, yeah.
Oh, got it. Yeah, excellent. Yeah, Daniel. Hey, good to see you.
I try not to,
and
just
that's,
in case.
Go ahead.
Go ahead.
And and that's the kind of thing that we do, right? We educate our clients and what they could be doing better, because a lot of people, and it's your job as a business owner to know what you don't know, right? You got to know, basically. You have to know that there's better ways of doing things and get the answer. Don't just accept what people are telling you. Don't just accept what is happening to your tax return.
Yep.
Research it. Find people that can help you, because there are ways. I mean, millionaires do this all the time. Billionaires do it all the time. They use the tax code to their advantage. There's nothing wrong with that. Okay.
Yeah. And the thing is, like, and there's a balance too, right? So I'm going to give the other end of it. Don't make up your own tax rules. I do not want you to get, like, we don't want you to get in trouble. So I think it's just important, and what I used to do, I mean, hey, I talked to 2 or 3 accountants. If you're not happy with your current accountant or your tax, and again, there's a difference or a distinction between an accountant and a tax planning strategy or a tax advisor. So I think that's always important. We're getting a lot of questions, so I'm just going to kind of run through some more questions. So Giselle's asking, I received PPP monies, but not sure how to use it because I don't have employees. So she did get a PPP loan. I'm assuming she might be
Excuse
You
me.
said some of
Yeah, it would depend on how it is that she qualified. Did she qualify as a self-employed individual? If she's self-employed, then you can just pay yourself. But if you applied by providing information on employees that you no longer have, then you may not qualify for the forgiveness because you no longer have the employees. You would have to pay that loan back. So it really depends.
Yeah. So Jack just got a quick comment, no PPP because I didn't want to owe the government anything. At the time, it was hard to know what is free and what is to be paid back. So, I could tell you the SBA loan, the EIDL loan, you got to pay back. There's no way around it. The PPP, especially in March, it was a little messy, meaning no one knew this. Luckily for us, Jose got a quick call from us just because he's in it on the pulse. So what I would do, Jack, I would go back at what he was also explaining, Jose, is that you could still qualify for the first time. Just because the second one came out, it doesn't mean anything. So if you fit those guidelines,
Yeah.
that might be something, right?
Yeah. So if you didn't get it the first time, you can go back and get the first one, right? It's the same thing. The second round, to qualify for the second round, you have to have used the first round already. You have to have spent it, right? And like I said, your revenues have to have dropped 25% or more quarter to quarter, and that qualifies you.
Yeah. Frederick's asking, so PPP is not free money. It's a loan and has to be repaid. Most real estate investors don't have employees. Why would they qualify? Or do you know real estate investors and
yes, they would qualify. And remember, this is where people get confused, right? If you are self-employed, you're not going to have employees. You are the employee. In essence, you are the employee. So you qualify using your net income or a 1099 that you received at the end of the year. That's all they're going to ask for. Okay. So having employees or no employees has no bearing on the loan. You still qualify if you work for your business. Now, if you're self-employed and you're reporting a loss, you have nothing to show you. If you had a loss before the pandemic and now you have a loss after the pandemic, you're probably not going to qualify. There's nothing there to show that you were paying yourself.
Yeah. And the other thing is, like, if you haven't qualified, I'm actually very organized, but it shouldn't take more than 20 minutes max. It's such an easy application. Let them deny you. Don't deny yourself first, right? But same thing, make sure you talk to your accountant and talk about the repayment if you have to pay back the loan. All right.
Now,
so it's not.
I just want to emphasize, I want to really highlight this. It's a loan, but it's a forgivable loan. The fact that it's called a loan, the only reason they did the term loan is so that they can control what you do with it. Because, once you jump through the hoops of paying the employees and paying your rent, then they'll forgive it. But if you use it to buy a Lamborghini, then they're not going to forgive it, right? So that's the reason they called it a loan and not a grant. But it is technically a grant. Eventually, it'll become a grant.
Yep. I was laughing because I know, like, there was a news story when it first came out. There was a guy that bought a Lamborghini.
Yeah, I wrote an article about it. Yeah. I don't know if you remember, but there was a guy that bought a Lamborghini with the PPP, but he was committing fraud and all kinds of things going on there.
Yeah.
So that's the reason they called it.
Yep, absolutely. So, can companies qualify for PP if they don't have employees? I think you kind of answered that already. So if you want to just quick,
if you're
what other businesses,
So if you're self-employed, you're probably not gonna be a company. If a company has no employees, you are the employee, so you should be paying yourself, and you would qualify. Okay.
Correct.
And when in doubt, apply. They're not really denying, as long as you have evidence that you were in business, right? Like for my self-employed people, your 1099 is enough. Take your 1099, bring it to your banker and say, this is my income. And this was my income in 2019. This is my income in 2020. This is how it's dropped. Bring that to your banker and just do the application.
Yep. What James is asking, can we use the 2019 tax return to use for the second PPP?
They may require it as a backup documentation, but they're going to look at quarter to quarter gross revenues. So you're going to need financials. You're going to need some sort of profit and loss statement. You know, you're going to bring in, okay, my first quarter in 2019 or my second quarter in 2019 versus my second quarter in 2020, I had a 25% drop. That qualifies you. If you didn't have a 25% drop, you don't qualify.
Yep, absolutely. And I know, again, I'm getting a lot of information like in the chat. We will definitely give you Jose's information, so don't worry, hang in there. Jose, if you want to go ahead, I think some people are anxious already, kind of want to set up something. I'll kind of still run through some questions too while you're doing
I'm gonna
that
put a
too.
link. I'll put a link of my my calendar there so people can just schedule consultations.
Yeah, because I know some of you guys are on lunch from your job, so you're kind of sneaking in. So I know you can't stay for the full 90 minutes. Also, if you guys don't know, we'll put that link in there also. If you haven't subscribed to our YouTube channel, there will be a replay. The replay will be within 48 hours. So by Thursday morning, you can actually see this replay. We have a lot of different webinars on there. So if you haven't subscribed, definitely check it out. It is a lot of information that we're kind of going through. And I know we're going pretty quick on some of these questions. So anonymous, I always love my anonymous people. Yeah, go ahead.
Let's talk about the EIDL, because that's the second part of the loan, right?
Yeah,
so the PPP, we addressed that. You qualify if your income drop, your revenues drop. The EIDL, the Congress said the SBA basically made a mistake in the first round, because they were supposed to do the advanced up to $10,000. Really, it was supposed to be $10,000. They just took it upon themselves because they thought they were going to run out of money to give $1,000 per employee. So now they're fixing that, right? So if you still have a need, there's a significant drop in your business, they're going to grant you the difference from what they gave you and what they should have given you, which is the $10,000, right? So let's just say they gave you $1,000 because there's one employee, you're self-employed. Now you would have to go back to them, and they're actually going to contact you. You don't contact them. They're going to contact you and say, Mr. Money Receiver, did your income drop 30% or more in any period of 8 weeks? So you can take the whole year of 2020 and look at an 8-week period. So you're going to have to analyze your financials, right? Because you may qualify for this. So look at an 8-week period. If that 8-week period compared to 2019 dropped by 30%, then you qualify for that advance, which is $10,000, or the difference between what you received and the $10,000. Now, to qualify, that's one hurdle you got to meet, is the 30% reduction in revenue. And because Congress got heat about all these big corporations like Chris Ruth, or big large corporations getting all this money first, and not the low-income communities, they're reversing it this time around. They're making it available to the low-income communities first before anybody else.
Right.
So to qualify this second time around, you have to show that you're in a low-income community, and that's defined by the IRS. There's a formal definition that says 80%, 20% of the 20% of the people in the community have to be, the income's got to be less than the state's medium income. I can post a definition on there, but it's kind of confusing the way they worded it. And there's also a link that I'll put in the chat where you can look up if your address meets that criteria. All right. So if you didn't get the full 10 grand the first time, you may qualify if you're in a low income community. And if your revenues drop 30% or more.
Awesome. And so those are, I mean, I don't know if is there any, well, let's talk about a couple of highlights, and then I'll go back to some of the questions. I know that I have a ton of questions in here, but I put a poll up there about, how many people are landlords, and more than half of you are actually landlords, which, bravo, good job on that portion. So how many people think that they're actually maximizing their deductions? Like, are you using any strategies like cost segregation? Are you using leverage, right? Are you using mortgages? If you want to put it in the chat, so we have a better idea of who our audience is, so we could kind of touch on, some best practices. I don't know. I'm going to put you on the spot a little, Jose, I guess. Some best practices for landlords. What would you think? Or what do you suggest to your clients that are landlords that
Landlords are, they're in the best position.
Yeah, I'll give you an
Better than
example
anybody.
right now. I just bought my first property, right? And I'm doing, I'm getting into real estate and I want to build a portfolio. So I have my first property. And this could also go for the people that don't have properties. So now you know what to do, right? On the tax end of it. So I picked up one property. My goal is to pick up 2 or 3 more properties next year. Is there anything I could do, Jose? You probably get that question all the time.
Yeah, I mean, depending if you're going to be doing this full time or not. If you're doing this full time, you definitely want to track your time. Okay. If you're if you're a landlord full time, then all the activity that you're participating in is passive, but you're most likely going to have losses because of depreciation. But now, if you're a landlord and you're also a wholesaler, then you get the best of both worlds, right? You have the non-passive income coming in, which you potentially will not be paying taxes on because you can take your residential rentals losses against it. So if you are doing both, you want to track your time. You want to track your time, your participation in the activity, because that could result in not paying taxes. Okay.
Right. Yeah, and that's the thing is that, like, okay, and let's talk about tracking. I know you were kind of talking about tracking a little bit. What is, can I track it in my head? I know it's kind of funny because I kind of get these questions, right? Hey, Jose, I think last week I put 4 hours into this, 2 hours, I drove this, or, so what would you consider?
Yeah, there's certain categories that you have to track, right? Whether it's you're leasing, you're dealing with the tenants, you're answering inquiries from the tenants, complaints, or repair requests, advertising, doing repairs. You track all that. Travel, when you're traveling to your property to go see your property, you track all that time, and depending if we're qualifying you for the real estate professional status, there's more activities that you can include on there, like brokering properties, selling, rehabbing properties. That's included on there. But if you're a landlord, you want to track the actual interaction with your property, the interaction with the tenants, because that's what's going. And there is no magic way of tracking it. You can use a spreadsheet, just be as detailed as you can. Use your calendar. I always tell my clients, use contemporaneous records, such as, you travel to your property one day, which is in Jupiter, because you have a tenant there and you're going to meet a contractor. So if you're leaving Fort Lauderdale to go to Jupiter, that's what, about an hour and a half? I don't know. Track the travel time. Then you meet with the contractor, you let them in the property, they do a repair, they give you an invoice, you pay for that invoice, and now you not only have a calendar that says you traveled 3 hours in the day to meet the contractor, you spent 2 hours there to be with the contractor, but now you also have an invoice from the contractor that validates your time, right? Your time and the day that you spent at the property. So that's going to be the most helpful. Just in the event of an audit, you want to be prepared. The real estate professional status is one of these because it's so good, right? The benefit is so good and it's so complex that a lot of people make mistakes. The IRS audits these. I mean, I'm not saying that everybody's going to get audited, but they audit some people just because they're using the strategy, and it's okay as long as you have your records in place. There's nothing wrong with that.
Of course. Yeah. And I think that's always important to basically know these things. I think it's a little bit of a challenge. I did put up a poll, you'll appreciate this, or maybe not appreciate it so much, about tax planning, right? Strategies for 2021. So almost 85% of you guys, the answer is no, or never had a tax strategy.
Wow.
What I do like that I'm kind of laughing is, hey, no one put I hate planning for tax strategies, which that's probably the one I would have picked. But so 85%, right? So the question, right? And you can put it in the chat a little bit too, if you want, is like, what's stopping you? Like, why, like, why are you not planning one for 2021? Well, like, let's talk about, and a big bravo for the people that have, right? This is not to pick on anybody. When do your clients, right, your real estate clients, I'm going to specifically pick them, when do they usually plan their strategy for the next year? Or is it too late? Like today's January 26th.
Realistically, I mean, in real life, it happens towards November and December. That's when we meet. We come up with some last minute strategies. What I like to see is come up with a strategy in January to use during the year, to use all year. And then November and December, we meet again to make adjustments to that tax plan, because we develop a tax plan, right? It's an actual report that includes all the strategies that I would like them to use to save a fixed amount in taxes. And I usually give my clients, this is how much you're going to be saving if we implement all these strategies. So ideally it's January, and then make adjustments in November, December before the year ends. What's important to know is that once January 1st comes around, you're limited. There's not a lot you can do. Real estate investors have a little bit more flexibility because you can do a cost segregation after the fact and report it in the following year. But for other strategies are, you have to implement them before the year ends. Like shifting income, hiring your children, hiring family members, retirement accounts, things of that nature.
And we kind of joke about hiring children. We're not promoting, we're not talking about sweatshops. I always say the same thing. I'm like, oh yeah, we'll have the children do this. I'm like, we don't mean it that way. So you want to actually, like, I always think it's great. What do you have your daughter doing also?
Well, I used to, not anymore, because she's a teenager now. She doesn't want to work. Yeah, but when she was smaller, she loved going to the office with me. She loved it. She doesn't do it anymore. But I used to hire her to do some administrative work. She would do some, shredding, filing. So I remember, when I was in meetings with clients, sometimes she would come in and offer coffee. It was kind of cute. But yeah, I mean, I would pay her a salary, based on how many hours she worked on a monthly basis. And it ended up being around $5,000 a year. And that $5,000 a year, I would put it into her Roth IRA. So the income that she received was not taxable, because she's under the threshold, right? Anything under 12,400, you don't pay taxes on. So she received the money tax-free in her account, and I got a deduction. My business got a deduction. And because Roth IRAs are post-tax, the contributions are supposed to be post-tax, being that she's reporting the income on her tax return as post-tax money, even though she's not paying taxes, she's able to save that money, and it's going to grow tax-free. So when she takes it out, whenever she needs it in the future, retirement or for college, whatever the case is, the growth included on that, the growth included in that Roth IRA will be also tax-free. So that's a powerful strategy. You're getting a double benefit. You're getting the tax deduction for your business, and your children are getting the tax-free income for years to come. Right? That's a great strategy.
I got a more personal question. Can I be your child? Can I be your child? And you go ahead, and I don't mind doing a little bit of work, and you just put my money into the Roth, so it's tax-free.
Absolutely, forever. As long as you spend your money on me.
I knew there was a catch. There's always a catch. You sound like my wife. She does the same thing. So she's even smarter. But yeah, so there's a lot of different things out there. I just think sometimes there's a ton of different strategies, and we've been doing webinars, and we have an upcoming webinar next week with Paul Regan with Hard Money. So we have a lot of different things coming up, and you got to figure out which strategy works for you. The problem is it's easy to look at so many different strategies and do nothing. What I'm going to do right now a little bit, because of time, right? We still have some time. We have about a half hour still.
Yeah.
We're going to make these. I have a bunch of questions, but we're going to make them quick answers or limit them. I know sometimes you might have more in-depth questions. My point is that, go talk to Jose specifically, but we'll just hit a couple of quick ones. Let's see, and a new established LLC apply for a PPP loan? think I used too many P's there. PPP.
No. So it has to
Okay.
be, the cutoff for that would have been, I believe it was February 15th, 2020.
Okay, fair enough. Daryl's asking, does the 2021 COVID relief legislation extend the ability to withdraw retirement funds without early withdrawal penalties in 2021? This part of the CARES Act expired December 31st. Do you want to just give the
So-
quick end of what that is?
Sure.
Like,
So
the short-
just remember that the stimulus package is a package that's still being negotiated. So whatever is in it, we don't know what the final version is. So we don't know. We know that the main thing there is getting money to the people, the $1,400 per individual, per taxpayer, if you meet the criteria. There's additional information on there. There's like, they're trying to raise the minimum wage to $15 an hour. There's unemployment extensions of 300 additional a week. And there's a lot, there's a 1.9 trillion in this package. So there's a lot in there, but nothing has been, we don't know the details, right? It's not finalized. So once we have the details, I'll be able to update you on it.
Do you negotiate with the IRS for your clients, the liens?
Absolutely. We love negotiating with the IRS. We've actually done it for you guys with the liens. Yeah, we did a couple of liens.
So we've had a couple of short sales. Not only was he able to lower it, or they were able to take it off the property. So it was a difference of us getting a deal and making $20,000 or $30,000 versus us missing out on a deal altogether. Having a network, and especially Jose on that portion. I don't want to say what the price is because I don't know if you give us better pricing. Do you want to just talk about negotiating liens, like, or negotiate with the IRS?
So keep in mind that, you know, if for my real estate investors.
Uh-oh. You just froze. Hey, Jose. Hey, can you guys in the chat let me know if he froze? Is it just me seeing that? If someone else could actually hop in and say, yep, he froze. Okay. And you know what the funny part was? He was just about to say something very important. Look at that face. So hang in there. I'm going to have our staff reach out to Jose on that portion so that we could actually get him back on. You know, it figures you talk about the IRS and liens, and guess what? You freeze, right? That's what most of us do. So, so he's going to hopefully hop back in shortly, and we'll get him in there real quick. So again, it's funny, like most of these Q&A questions are more for Jose. What I was stating was that, yeah, we had a deal, IRS lien, I believe it was almost $60,000 or $70,000. It was a short sale. So in that short sale, there was no equity. Having no equity, it didn't make any sense. Jose actually negotiated with the IRS and moved it over to another property. And we were able to get the deal. It's about $25,000, $30,000 in profit. So that kind of helped out also. But it's important that you actually do work with an accountant. Raj, I can answer some of your questions. If I own 3 rental properties and wanted to set up an LLC, how's it done? It's very easy. I know some of you guys have probably been going to sunbiz.org to set up your own corporation. One of the challenges with sunbiz.org, you also have to do minutes. What we found is a lot of new investors, they try to do it themselves and then they make mistakes. Raj, super easy. Call Jose. He could do that for you easily. Maybe you'll win the raffle today and it won't cost you anything. So based on the LLC, it's about $625 for his services. So that will, let's see. In the meantime, I am going to try to still see what's going on with Jose. Hopefully we could get him back on. I am going to see if Ashley is, Alexa is actually trying to get him back on the phone. So hang in there, guys. Let's see. Any tax breaks for owning land, David? So again, I'm going to start with, I have to give you my disclosure. I am not an accountant. These are questions for Jose, but I do know some basic stuff on it. Generally speaking, you cannot depreciate land. Land is not depreciated. You can't depreciate it, so there's not a break on it. If you do have a mortgage, you can deduct some of the taxes. So, oh, Jose,
Hey,
you're
sorry
back.
about that. I guess
You know
I
what's
lost my
funny
internet
was-
there for a second.
I was laughing because it looked like it froze, and everyone looked at it, and you were about to say something super important about the IRS, and it froze. So that's why we're laughing about it. Yeah.
Sorry about that. Yeah, we were talking about liens, right? So for my real estate investors who run into homeowners that they're trying to buy the property or flip the property, sometimes you're going to run into homeowners who have a tax lien or all kinds of liens, right? If you have a federal tax lien and the property's upside down, they would qualify to get that lien removed because it's a lose-lose situation, right? They're not going to be able to pay the IRS back, and the IRS doesn't want to foreclose on that property. So they'll remove the lien if they qualify. There's a qualification list that you have to go through to get the lien removed, but it's doable. So keep that in mind when you're door knocking and when you're finding deals, and don't let an IRS lien, scare you away from the property, because there's things you can do about it.
Yeah, and to add to that is, right, so some of the biggest deals we've got has been issues, whether it's liens from the city, right, or IRS liens. Most investors would walk away from that. So how many people in the chat would walk away from a deal if there was a big lien from the city or an IRS lien? Would you pass on the deal? Be honest, guys. I could tell you 10 years ago, I would have definitely passed. So, now knowing what I know, I'm like, oh, no problem. So a couple of people know I won't. You won't do it, or you, Jack? I'm on your side. I have one. Letitia, you have one, and you need help. Definitely talk to Jose about if it's that lien, if you want to partner on the deal. So one of the things I also do put in the chat earlier was on a total side notice, we do have a partnership program. It's wjlpartnership.com. Remember, Ryan and I are big cash buyers. That's number one. And then we also have a 10,000 plus cash buyers list. So if you need help, selling your property, so we have a partnership program. You do not have to be in our mentoring program either about that. So also throughout the chat, we are also putting our upcoming events during this pandemic. Besides the boot camp, Ryan and I are committed in education. And so, we've been listening to you guys saying, hey, these webinars have been great. So we're actually asking a lot more of our corporates. So we do have a bunch of webinars coming up besides our national or monthly meeting with Gene Garino. That's coming up next week too. So make sure you're following us on BREIA.com events. Just register. It's free, guys. Because usually I get the call later saying, oh, I missed that kind of stuff. So let's get back to some of these questions. Are property taxes and association dues deductible for land I pay in another state that I'm going to develop? So that's what Garrett's asking.
Yeah, they're deductible. I mean, where you deduct it varies depending on what the purpose of the land is, but yes, the short answer is yes.
Okay. Fortuna, if I didn't receive a 2021 stimulus check because based on the 2019 revenue, can you take the amount of the check off your 2020 taxes? Right, so they didn't get a stimulus check, it sounds like, right, because they made too much money.
Yeah.
So I think they're asking if they could take that off. And I mean, I'm not going to answer it, but I would say no.
I don't know. I guess you would have to. Did I read something that says you may be able to get a credit on your 2020 tax return if the threshold dropped to below the 75? You would get it there.
Okay. What about Jose is just asking a quick qualification for a real estate investor again? How many hours was it? Or
so to qualify for the real estate professional status, you have to have 750 hours in the real estate industry. Whether it's doing sales, construction, reconstruction, rehabbing, repurposing the property, wholesaling, and 50% or more of your business personal service activities got to be in real estate. So in other words, you can't be a tax advisor full-time and a full-time real estate investor. That would disqualify you, right? It's very hard to prove that you're doing 41% in one, 49% in one, and 51 in the other. So those are the two rules to qualify for the real estate professional status. But if you are a real estate investor full-time and you're a teacher at night part-time, then that's okay, because you can say you have more than 50% of your personal service is in real estate. Okay.
Okay. Sounds good. Sorry, guys. It's funny because I'm getting so many things in the private chats. Also, people asking specific information. What about, let's talk about this one. Let's see, Sam's asking, do you have a connection to lower property taxes? Are you working with somebody that specializes that in the area? We had somebody.
I don't,
and
but I actually, funny story, I actually had to deal with that this year because property taxes went up in my place, and I just called the county and said, what the hell? You know, I just kind of fought with them. And I think I got about, maybe I want to say 8 to 10% reduction on my tax bill, just by,
wow.
you know, just by telling them, hey, I think you guys made a mistake. I need you to reassess this. You're not considering my closing costs. You're not considering this. I didn't really spend that much money on this property. You know, you kind of have to get, you got to get with somebody on the phone basically and have a conversation with them. And they're always willing to help. Well, not willing, but they will.
Yeah, right. It depends. It depends on the county too. So
Yeah.
I'm going to add that in there too. I am trying to get to all your questions. So I know some of you guys are asking, again, specific questions about your situation. I'm probably not going to be able to get to you guys. I know Edwin's already asking, what do you charge for tax strategy planning? Is there a range or is that more on the consult?
The tax planning is based on how many strategies we implement, how many strategies we propose, how much the tax savings are, and things of that nature. How complex the plan would be. It's usually on a flat fee basis. So and it varies. It varies by, everybody's different. Everybody's situation is different. So it's not a flat fee for everybody.
Yeah, that's what I figured. And again, the best is to see, you know, consult with them and, you know, make sure it works for you too.
Yeah.
Because
What we do is we go through a series of questions to kind of discovery to find out where the tax savings are, right? To see if we can save you money. If we can save you money, we'll propose a tax plan. We'll give you the price. We'll, and then if we decide to work together, we'll help you implement that tax plan during the year.
Yeah. So Veronica's asking, if you have a long-term rental and do not qualify as a real estate professional, do those depreciation costs and losses count against your W-2 income, or are losses limited to income from that property?
Depends. If normally, the answer is always going to say it's going to be depends, right? So depends on the rental activity. If it's considered passive rental, then those losses are locked in for future use. But if they're considered non-passive losses, because you were able to elevate the activity from a passive to a business or trader business via Section 162, then those losses can be applied towards your ordinary income. So it really depends. And that's where tax planning comes into play. Okay, you have to plan around these things.
Naj, hey Naj. Naj is a longtime member of BREIA. It's been a while. I can't wait to see you guys face to face soon. He's asking, he's got 3 tenants that owe him rent from September 2019, and they're still not paying it all. And the judge hasn't even given the writ of possession, and the losses are occurring. Do you know if there's any government help? They're not Fannie Mae loans. Have you seen anything for? So the question really is, real estate investor, they haven't been paying. His situation's a little bit different, because if they haven't been paying in full since September 2019, first of all, Naj, you know better. You got to get them out first of all. So
but I mean, maybe there's another way of getting them out, right? And I think we have an attorney in the group, a real estate attorney.
Oh, I just saw a correction from him. He said September 2020. Okay, so you're better. If you would have told me over almost 2 years, I would have been like, okay. So this
Yeah.
is during September.
So yeah, there's things you can do maybe from a legal point of view. I know that you can't evict them for not paying their rent, but there may
Mhm.
be a way to evict them for something else, right? Like
Exactly.
they
And
broke the
there's a
lease
different,
somehow.
I'll just answer that because Jerry Grant, we have the attorney, he
That's
spoke
what I
about,
was referring to. Yeah.
they have a different way if they violate other parts of the lease. If you actually, email us or all our corporates are on www.brea.com, but they would be a great person to talk to. They are dealing with this consistently with a lot of other clients out there. So
Yeah, but
um,
you would qualify for the EIDL advance if you are in a low income community, because that sounds like it's more than 30% of the revenues. So you would qualify for that if you're in a low income community. So you may want to look into that.
so is it okay to pay children into a UTMA or a 529? So I know you were talking about the other strategies. I don't even know what I don't even know what a UTMA is. So
I'm not good.
you,
I'm not good with the acronyms either.
or I know 529, but can they
I mean,
pay?
I could tell you what I do. I mean, I did a 529. I mean, I liked it. I mean, it's prepaid. It was prepaid, prepaid college, but there's a lot more. It really depends on how old your child is, depending on what you're trying to accomplish. I mean, in retrospect, I mean, I probably should have done something with the markets, put the money in the markets, because I started my plan since my daughter was 2 years old. So I had all this time. She's 15 now. So I had 13 years of having my money playing the market. And now it's
Right.
too late because she's going to be using the money. I'm not going to do that now because it's too soon, too close to the date. Right. But yeah, there's different things that you can do with it. It's just a matter of analyzing what the best scenario is for you.
As I'm still going through a bunch of these here, Michael's asking if you make 200K a year but sell a property or stocks for more than $1 million, will you be charged income tax of the new 39.6 on the million? So I guess
Well, the
stocks. I know
tax
that's
has not changed yet, right? The tax law is still the tax law what it was last year. So whatever Biden is proposing for 2022 or whatever, whenever it changes, remember that that's just, at this point, it's just a proposal. It doesn't mean it's going to pass. Biden wants to raise the capital gains taxes to, 39.6 for anything over $1 million, right? So our tax planning is we're still considering the tax law as it is now, because we can't drive ourselves nuts anticipating what's going to happen until it happens. We can't anticipate. We kind of have an idea what's going to happen, but knowing that the Democrats and the Republicans are not really communicating well right now, and they're not agreeing to anything, I don't think Biden's plan is going to pass as written. It's going to have to be negotiated. Republicans are never going to go for that. Republicans are never going to go for a tax hike this big. I mean, taxing everybody over 400,000, corporate tax rate going from 21 to 28%. It's just, and then there's an additional payroll tax that they're talking about adding, which is an additional 12% or so to people over 400,000. So that effectively raises your tax rate from 37 to, if you're self-employed, to potentially 60%. If you're not self-employed, 50-ish, right? So it's pretty high. Republicans are never going to go for that, right? They're going to say, why are we're just getting our children and our grandchildren in trouble. Why are we doing that? That's what they're going to say back to the Democrats. Democrats are like, no, we need the money. We got to help people out, but the proposal is just a proposal. So don't make plans on a proposal that we don't know where it's going to go. It may not go anywhere.
Yeah,
so keep that in mind.
I mean, that's why I love buying stuff from my Roth, especially like the big deals or rehabbing or one-owned properties. It's great if I could have dumped more money into that years ago. And there's different strategies, backdoor Roth IRA, SEPs, and you could set up pension plans. And we'll actually have a seminar in March. Carl Fisher, one of my mentors, actually with Camel Plan is going to talk about some of the crazy strategies that he's seeing high-level investors using. I know Jack's asking, I'm going to paraphrase his question. Jack, your questions are way too long. So his question, the basis is, I know you talked about cost segregation, and it's a study, and we've talked about that in past webinars. So what he's trying to figure out, when is it beneficial versus on cash flow versus not? Is there, I don't know if there's an easy tool that would say, hey, you know what, I might take this strategy without actually going through everything. Is there a simple?
In my opinion, in my professional opinion, I think it's always beneficial, whether you have a big tax bill or not, because the cost segregation, if you produce losses that you may not be using right away, those losses stay suspended until you need them. So even though you may not use them in 2020, let's just say that the cost segregation allows you to produce a loss of $50,000, but you only need 10. So you only use 10 of the losses, right? Now you have 40,000 in a bucket to use for future years. So you can always use them. You don't lose them. Not only that, but the cost segregation is going to allow you to have a very detailed report on what makes up your property, right? When you buy property, let's say you're buying a property for 300,000, you don't know what's included in that 300,000. So let's just assume that I'm going to simplify this, but 300,000, back out the land, 25,000 for the land, you're at 275. You depreciate the 275 over 27 and a half years. You are depreciating $10,000 a year. That's the non-tax strategy way, no cost segregation way. But by doing a cost segregation, now you know what makes up that 275, and you can properly depreciate the components within the property. Now you can say to the IRS, hey, Mr. IRS, I did a cost segregation, so some of this property is not really real property. Some of it is personal property, which I can depreciate in 5 years, right? Some of it is improvements, which I can depreciate in 15 years and take bonus depreciation on. By having this detailed report, if you do improvements to the property at a later date, now you know what the value of those components that you removed are, so you can expense them. A lot of people do renovations to the property not realizing that the old components that they removed from the property as bought, they don't realize that they can expense them. So they're just adding the new components, depreciating the new components, but they're not expensing the old ones. So the cost segregation would help you do that as well. So that was a long-winded answer, but in my opinion, it's always good to do a cost segregation on rental property. Not anything else but rental property, commercial or residential.
And I gave Jack a hard time for the long question, and then you get the long answer anyway, right? So I'm just messing with you. I know we're kind of wrapping up on time also, so we still have 10 or 12 more minutes. We're still going to chat a little bit. I'm going to try to get to as many questions. I am also going to put a quick poll about our mentoring, because I'm getting private people asking about our coaching program. Just fill out the poll, and you could call our office, set up an appointment with us, and we could talk about that. Our boot camp, all the other good things out there.
And also, guys, I'm going to put a link to my YouTube channel, because I'm starting to do some tax tips on there. So you guys subscribe and learn a few more things via the videos that I post. So I'm going to put it in there, subscribe, and you'll be notified when I have a new tax tip, primarily around the real estate area. So, you're in the right group here.
Perfect. I saw, let me see that question. Like Sam's asking, do you think it's a good idea to buy a property inside a self-directed 401k plan, or how about inside a Roth 401k? So I'm not sure if you could can you buy it in a 401k plan? If it's
self-directed, if it's self-directed, I think you can, but the difference is really tax, right? The difference is one is Roth and one is pre-tax. So one is post-tax and one is pre-tax. So if you buy it under your Roth IRA, self-directed Roth IRA, the profits from that sale are going to be tax-free. They're going to go back to your Roth IRA, and then when you retire, you're going to take all those profits tax-free. So that's the biggest benefit of doing that. If you do it in a 401k or a self-directed 401k, it is not normally a 401k, although it can be. Normally a 401k is not pre-tax. I'm sorry, it's not post-tax, it's pre-tax. So the profits go back to your 401k. When you withdraw the money, when you retire, you're going to be paying taxes on that. So that's the biggest difference.
Absolutely. Just so you guys know, Jose has been working on these strategies. He's also an investor for a long time. I do have a question, and like these things always get so, depends on your situation. So first of all, Josh definitely is going to reach out to you privately because he owns about 60 properties. He buys and sells about 10 to 20, and he's never had a great tax plan. So obviously you definitely want to contact Jose directly because you're in a little bit different situation. Also, there might be different things that, if you can't sell some of these properties, again, Ryan and I are buying more properties. We're also, have our partnership program where we have bigger buyers buying from us. So that's always an option out there. I have an anonymous question. I have a regular IRA, 300K today. I want to change it to a Roth IRA. Can I convert it all at once? What tax bracket will I be in? So I know you can convert it all at once.
Right. Well, we would have to look at your income, right? I mean, I recommend not doing it all at once, depending on where you are bracket wise. So you may want to convert a portion of it until so it doesn't put you in a higher tax bracket, right below that next tax bracket. And you can do that every year until you do a full conversion. Yeah, but it really depends. I mean, you may have a need to do it now. I mean, that really depends on the individual, right?
Yeah.
The best thing to do is run the numbers.
Yeah. So my dad, he's 81. He had a traditional IRA, worked for a company for a long time. Long story short, and it was the same thing. I talked to Jose and we talked about a tax plan, and we were converting slowly. So we take 40,000 here, 60,000, because I did not want to bump them up. And again, we'll have Carl Fisher from Camel Plan talking next month about this directly, because what you're going to start realizing, down the road, if because there's a 5-year waiting period, there's an inherited Roth IRAs and all these other things, so it gets a little bit more complicated. I know that's the short version of what we're telling you. If you guys have questions specifically on that, you can email me and I'll put you together with the right person, so that they're way above my pay grade. But definitely talk to your accountant, because you don't what you've got to realize is, like, you're, I don't know, like an orchestra conductor. You can't just know one thing, right? And it's impossible to know everything. So if you're thinking about converting, and if I didn't consult, Jose about it, I might have converted it all and got banged out for more in taxes. Versus saying, hey, 2 years, 3 years, that kind of plan. And it, I don't know, you don't want to fix that later because you won't be able to on that point. So
yeah, you can't, right? So these are the types of conversations that you want to have with your advisor. Don't just do it on a whim and don't rush through these decisions, because it'll cost you a lot of money. Also, don't use the wrong person. Don't, I don't know if we said this earlier, but not every advisor, not every accountant is created equal, right? Everybody, just like attorneys, they have their specialties. Not every attorney can do it all. The same thing goes with tax advisors and accountants. You want to make sure that you're working with somebody that understands your business.
Absolutely. And I'm going to end it with one last question. Again, my idea is, I know you guys have so many questions. James is asking, would you recommend opening a different entities for different real estate strategies? Like, for example, if you're going to hold properties or wholesale, or, or do you combine them all at once? I know what your answer is on this, because you beat it down.
So you want to have, if you are a wholesaler, a flipper, and a landlord, at the very minimum, you want to have 2 LLCs. Okay. The passive activity, which is the landlording, right? The rentals should be under a sole proprietor LLC, taxed as a sole proprietor, or a partnership if you are in a partnership, maybe married, husband and wife partnership. If you are a wholesaler or a flipper, rehabber, you want to have an LLC taxed as an S corp, primarily an S corp, depending on where your income is. But you never want to mix the two, okay? Because there are restrictions against S corporations having more than 25% of their gross revenue be passive. So that can be a problem down the line. And there's multiple issues we have in property under an S corp. If you remember anything about this meeting, remember that you never want to own property under an S corporation. That is a big no-no. There's multiple reasons behind it, which include basis issues, loan issues, IRS restriction issues. So you never want to do that. All right. So remember that. 2 LLCs. One is for passive and one is for active, non-passive.
Absolutely. And also we do have a winner, but here's the funny part is they haven't put their name when they registered, so it's their phone number. They should have received a
Forfeit.
text. Yeah, I know, right? So whoever the lucky winner is, please let us know, call our office. Otherwise, I'm going to use it. No, I'm kidding. So make sure you should have received the text. Maybe you're on your phone, whatever it is, contact our office and then we'll put you together with Jose's team and you'll get that free corporation.
Yeah, and if you don't have a need for it, I mean, you can always give it away.
That's a nice gift. Yeah, it's a nice gift on that portion. So we're almost out of time. So a couple of big things. Jose also put his YouTube channel in there too to watch some of his videos. He's been, pushing, his YouTube channel.
Subscribe to that. I'm trying to get to 1,000.
Yeah, and if you're not on our YouTube channel, make sure you subscribe. We've been putting that in throughout the chat. If you're interested in our mentoring program, obviously give us a call. We'll set up a Zoom meeting if you want to come in, grill me with 1,000 questions, go for it. Boot camp obviously is this weekend. A couple other announcements. So next Tuesday, Paul Regan, one of our hard money lenders, he's going to do 90 minutes of a presentation like this, webinar. We're just going to answer a lot of questions. We're going to give you some best practices. I think I convinced him. It's something crazy. I think I convinced him on giving away up to 3 appraisals on pricing a $900 value. I know, if you guys know me, I'm always trying to beat you guys down, and I'm talking about our vendors like Jose that we love and Paul Regan, and
always trying to make me spend money.
We also have our REIFAX seminar coming up also. So that's, some of you guys know Francisco, that's the software we use. So that's coming up also, and that's free. And then I know a lot of you guys are members or want to become members of BREIA. So we're going to spend a good hour and a half of all the benefits. So if you're not using the benefits, you're crazy. You're already spending the money there. So that includes Home Depot, Office Depot. I saw a bunch of you guys are landlords, Rent Perfect. It is literally 95 cents for the landlord, the $35 application fee. You could push it on your tenant. So it's phenomenal. It's started by a private detective. So they could pull up evictions and things that most other companies cannot. So they're phenomenal. So if you're not using them, so there's a lot of different things out there that we're doing.
What's the name of that? What's the name of that?
Rent Perfect. And and I'm going to pick on Jose too. He's my favorite because we're friends. So he's the perfect example of being a corporate member or a member of our organization.
Yeah.
And he didn't know that. So Rent Perfect,
I didn't know that. Yeah, no.
Home Depot, Office Depot. I know you're buying a lot of stuff. So if you're actually using those benefits, it should pay for the $249.
Right.
The other questions that Ryan and I are getting, I know, the pandemic, it's taken a toll on all of us. We still do not know when we're going to go back to in-person meetings. We want to make sure it's safe for everybody. We are, at least to this point until May, we are not going to do in-person meetings. We're going to do a lot more, same thing, webinars, our monthly events, just because we want to make sure it's safe. Again, we do miss those meetings. It's fun. It's great to see people with legs, meaning I'm so tired of just seeing people from the chest up or the shoulders up. So I think that's always important. Also, Jose, did you put I know you already put your link in for.
Yeah, let me do it again just in case somebody missed it. That's my link to my calendar to get your 30-minute consultation complimentary and see what we can do for you.
And you know what, if you guys, I know there's still a lot of you guys still on the chat. So this helps Jose and myself also. are you finding these kind of webinars beneficial? Is it, should we have Jose come back in March or April, right before tax, do another one? And if we do, like, is there more specific stuff that we want to do? So that's why we didn't do a normal presentation, because we wanted to really answer a lot of questions. And it's always difficult with taxes, because I know everyone's in a different specific situation. So you could always let us know if these things have been helpful. If there's specific topics, right, that is good for the group, guys, like, because we have hundreds of people on these webinars. We want to make sure it's beneficial for everyone. We could always talk about it. You could easily email us, or Alexa or myself, and say, hey, it'd be great on this. And we'll have Jose back, talk about something else that's more beneficial or beneficial in your real estate business. Any last words that you got, Jose, that you'd like to say? Or
yeah, I mean, if anything changes with the tax laws, I mean, we'll keep you in the loop here. But I don't anticipate any changes in 2021. I do anticipate some changes in 2022. So that's going to be another presentation. It'll probably be a longer one, but when that happens, you guys will know about it. In the meantime, just reach out if you have any questions. If you're confused about the PPP, I mean, I think we addressed most of the questions in the PPP, but if you have any tax planning questions.
I got a question, Jose. Like, and this is really for our audience also. If I convince, I'm always going to put Jose on the spot, so it's pretty funny. If I convinced, Jose to do an all-day event, it can't be free, guys. I'm just telling you that we have to charge something. We have to do, on that portion. And usually the all-day events are usually anywhere from, for members, $79, non-members $99. So if it makes sense, I don't know, we could always do a workshop. And then the second question again will be, I know a lot of you guys work full time, and also I know a lot of you guys have families, right? So you want to spend time with your family, or you're doing other things on the weekend. Here at BREIA, we're trying to figure out the balance of, with the webinars. So like, that's why you're seeing a lot during the day. We have some at night, and I know Ryan and I can't make everyone happy, but again, we're trying to balance it. But if that's something that you guys see down the road, and maybe it's an all-day webinar, if you guys are open to it, we could also do that on that portion too. So I know, it looks like Jose's got some super fans, so I'm kind of laughing. They're like, yeah, let's do it.
That's what happens when you save people a lot of money. They become fans.
Yeah, and Edwin, the boot camp is this weekend. So just so you know, that's coming up, and Jose will be one of our guests for the boot camp too.
Be one of the speakers.
We'll have, again, a replay. This will be up probably within 48 hours. You'll also get a quick review from me. Hopefully you'll give us a 5-star review. It's for Google, for Miami-Dade and BREIA. Talk about what you like about it, right? And if you don't want to give us a 5-star, right? So here's the deal, guys. If you say, Anish, it's only worth 3 stars, don't put the 3 stars. Call me or email me. I want to know where we dropped the ball. Was it I, or was it our staff, or we missed out on these things? We want to make sure we're delivering to our members, and hopefully some of our non-members too. So we put a lot of effort and thought, but into these webinars on what to teach and who to have. So it really helps us out all the way through too. So
yeah, also there's a lot of research that goes into these. So we like to hear your feedback. Let us know what you thought.
Absolutely. And I want to thank Jose for getting us through this little PPP, EIDL loans. Again, I know you guys are going to have specific, questions. I'm just going to also let you know, is usually after these webinars, remember, there's literally hundreds of people on these webinars, and I know sometimes on your Calendly, like, you get booked pretty quick. Hang in there. So, he always gets the flood. The other thing is, out of respect for Jose, we convinced him on the 30-minute tax strategy consultation. We do wish that, you respect his time also. It is a hard 30 minutes, unless you're actually become a client of his, it's different. I just want to make sure that, you guys aren't, it's an hour or 2 hours and you're talking about things that are not related to your tax plan, and it's very easy to do. You're easy to talk to. I just want to make sure we value Jose's time, as I get him to do these consultations also.
Yeah, and I will add to that. I will say, be ready, right? Have your numbers in front of you. I mean, I can't help you if I don't know how much you made in 2020. If you don't have your financials ready, you don't know what your gross and your net is, or what you pay in taxes. There's not much I can do for you. We're just kind of like hanging out at that point, and that's not what I'm trying to do, right? I want to be able to help you, bring value to you.
Yeah, and by the way, congratulations, Michael, for Nicola. He is actually the winner. Michael, if you go ahead and email us here at the office, we'll put you together with Jose. So you're the one that went to the free corporation, the $625 value. If you don't need it, obviously it's a nice gift too. So make sure you contact us and we'll put you directly together with Jose. Again, I want to thank Mr. Ramirez for taking the time out there. We look forward to your feedback of today's webinar, and we hope to see you soon. Our next event is next Tuesday. Make sure you sign up for Paul Regan. He's given a bunch of giveaways too. So there's no reason, I know COVID, pandemic, there's no reason to stop your education and your real estate business. So thank you, Mr. Ramirez, and we'll be in touch soon.
Thank you guys. Have
Thanks.
a great day.
Too. Bye.